All right, I hear you. My videos are too friggin' long. And while I would love for you to all have the time and patience to listen to all of my wisdom and parting words, I get that we're all busy. And truth be told, if I start watching a video and see that it's like longer than 3 or 4 minutes, it's almost always a big fat nope from me too. So I get it. And on that note, I'm going to get right to it. I'm also talking very fast. And today I'm talking about property taxes and your mortgage. Quick disclaimer is all mortgage related questions should be going through your mortgage professional. And everything I'm about to tell you has been explained to me from the professionals that I work with regularly. So if you're buying a home, the lender that you use may have a policy that under certain circumstances, like if you have less than 20% down, that they must pay your property taxes for you. You don't get a choice, they just take it over. And this can be really positive because then you don't need to worry about it and it's just handled. And essentially what they do is they create a tax savings account, take your monthly payments, and then they pay your property taxes annually on your behalf. When it becomes an issue is if the lender reviews your file and deems you to be a higher risk. Let's say you have a minimum down payment, maybe just enough in your savings for closing costs, then they're going to want to cover their butts. And what the lender is trying to avoid is if you default on your mortgage, they don't want to be responsible for property taxes that you haven't paid. And so what they're going to do is they're going to estimate what they think your property taxes are going to be the next year, divide it by 12, and then withdraw that on top of what they were already going to withdraw. And so without getting into detailed calculations, you're going to be looking at roughly double the withdrawal you were expecting. And so for people with very little wiggle room, this can hurt. And the extra challenge is that the review doesn't typically happen until after conditions are removed and financing is in place. And so this can be a surprise that people are just not prepared for. And so I do want to clarify that the banks don't keep this money. This isn't money that they take. It will get applied to your taxes at some point. And once they have enough of a buffer, they will return to just the regular withdrawal rate, but it can sting for a while. So who does this? Well, we see it more with the bigger banks and less with like other lenders, like monoline lenders. But the most important thing here is that you know that it is a possibility and that you're talking about it with your mortgage professional or your bank before you sign paperwork, just so that you're going in with your eyes wide open. So if you have any questions about any of this or mortgages in general, I do work with some really amazing mortgage professionals and would be happy to pass along their names. Just let me know. And other than that, that's about it. I hope that was helpful and I hope that was short enough for you. Have a good day. See you next time.